Hello friends, this is Raj Sastry from Raj Option Trading. Today is September 25th, 2021. I want to talk about heavily shorted stocks and how to trade them. So if you trade these heavily shorted stocks right, you can get into very nice short squeeze and very good swing trading opportunity. So with that, let's get started. Top of the list we got TIGR, a Chinese-based stockbroker, $11 stock. They announced their earnings a while ago and they did very well. And very high short ratio, 47%. And we got float, which is very low, 22 million. So with that, looks like it's a fundamentally good company with nice quarter-over-quarter sales growth and very good gross margin. And we got here VIH, AGC. As you scan through these, also have got high short ratio and low float. I've got a couple more here, PBTS, Neuro, Workhorse, Blink, and so on and so forth. Pay attention to what insiders are doing and what institutions are doing. Many of these companies have got nice institution buying here. They realize stock is down big. They're also scooping these stocks up. And look here, we got few stocks where insiders are buying, PBTS, Neuro, and even Best for that matter. So we'll look at this in a little more detail and go from there. And as you look through these heavily shorted stocks, also pay attention to the sales growth. When sales growth is double digits and high, that indicates these are fundamentally good companies. They are bringing in good revenue and revenue is accelerating. As an example, TIGR and Neuro. And you can look through Blink here and Smile Direct. These are fundamentally good companies bringing in more revenue. There is a positive revenue growth. And coupled with a nice gross margin, those can be success for recipe for success here. And typically it's good to focus on low floats. So that way there is not too much stock available. So this can end up creating a short squeeze situation. So with that, let's jump in and look at some news here. From a stock news perspective, we got here Up Fintech TIGR. They report more than 60% of newly funded accounts acquired from international markets. That tells you this company is trying to diversify into international markets, which is always good. And when they announced the earnings last week, they also clocked very good growth, 99% growth in the revenue. And right now, stock has pulled back pretty hard. I think it's a very good buying opportunity coupled with a very good short ratio here. And then we got here Power Bridge Technologies, PBTS. Looks like they're also doing very well. And they got some crypto mining and digital asset operations. Stock is down big and it's in the trading range right now. Good to buy and accumulate at these levels and wait for a short squeeze. Then we got Workhorse here, WKHS. This stock has been down big. Looks like they're halting their electric vehicle delivery and they're also making some modifications to their vehicles to satisfy with the federal regulations. In a nutshell, they got series of bad news here. Stock is down big. I think it could be good to accumulate slowly and build a position here. And we got 15 best short squeeze stocks according to Insider Monkey. We got GameStop, ICPT, BGFV, and so on and so forth. We will look at many of these and see if it's worth buying at these levels. And then we got Smile Direct here. Looks like they're trying to improve their presence in Europe and entering the France, and they're also focusing on growth initiatives. That's a very good news for Smile Direct here. Stock is down at these levels. I'm willing to slowly accumulate Smile Direct here and take it from there. And we got here GameStop dropped, but we got two more new meme stocks, Go EV and CEI. And typically I don't like to chase the stocks when they're high. Go EV had a good run here. We'll see if it's still worth buying here. And we got here three most shortest stocks here. We got Ride, CRSR, again a gaming stock, and we got Fubo. I think all these stocks are down and good to accumulate. And we got a news here where hedge funds are selling Tesla and buying other EV stocks like Ford, NIO, Romeo, Lee, VLDR, ARVL. I love many of these EV stocks at these levels. They've come down pretty hard. I think it's good to accumulate them. And then we got your three artificial intelligence stocks to buy. We got Lemonade, Crowdsource, and Amazon.com. I think Lemonade has come down pretty big. I think it's very intriguing. Also has a high short ratio. I also love CrowdStrike here. CrowdStrike is a great stock, a cybersecurity stock. They're also a little bit down from their high. Amazon is always a good one to buy on the down days. So with that, let's jump in, look at some numbers and see what we can make out. And before we jump into the numbers, let's look at broader market and see how market is shaping up for next week. So with that, if you look through here, we got S&P 500 ETF SPY. As you scan through here, we got a couple bad down days in the past. Now we are a little bit in the clear. We got three nice up days here. Finally, SPY S&P 500 is catching up to its 25-day moving average, and from here we can see where we go. We'll look at some of the predictions and what can happen in the next chart. And then we got QQQ here, Nasdaq 100. It's also doing nicely after dropping for a couple days. It's making its way higher, which is good sign. And we got Dow Jones Industrial Average. After dropping big time, it's also showing some progress here. 3 good days here. And finally, we got Russell 2000 here. After dropping big time, it's also showing some progress. That tells you, good days may be ahead, but we have to watch carefully. And as you scan through here, Russell 2000 after 2 great days, we didn't have a higher high here. So that's why I think we'll be in the trading range next week, indicated by Russell 2000. So with that, let's jump in here. And questions all of you have is really, where do we go from here? Can we make money in this market? So one way to understand where do we go from here is to look at S&P 500 futures. This is the big daddy of all stock market, and typically it tells you what might happen. It will offer you some glimpse here. As you scan through here, we got S&P 500 future, one expiring in December, and right now it's 4445. That's the price per contract. And then if you look through here, we got March. March is 4430. That tells you, hey, don't expect too much surge here. It will be kind of in the trading range. And from there onwards, in June, it dropped a little bit. It's showing the current sentiment in the market. Market is not pricing in a huge increase. It's kind of pricing in a trading range, not a huge, increase. And also you can look at what might happen next week and week after. For that, we typically look at S&P 500 option chain. So if you look through the option chain here, we got Monday, which is 2 days out. You can expect maybe $29, 29 points up and down here. So that's one thing you can expect, not too much volatility, but there's a good 29 point up or down. And then we got here, September 21, 4 days out, Wednesday expiration. Same story, like around 12% up or down, around 50 points up or down. So what futures is telling you is really next week, don't expect too much swing here. We will be in a 49-50% up or down type range for the week. So that's what market is expecting here. So be prepared to have a market which is kind of in a trading range, maybe around 60-70% up or down for next week. So with that, let's jump in here, look at what's happening from a call, put contracts and call contracts. As you look through here, we got call volume, which is 104,000 contracts traded here. And as you look through here, puts, we have 365,000 contracts traded. That makes the put call ratio as 3.4. So we have more puts traded than calls. That tells you there are market participants who are hedging and they're thinking there may be a market drop. That's why they are buying more put contracts compared to call contract. At times this could be a good indication. A lot of people are buying puts. That means as a contrarian you could take the other side and buy some calls and buy some longs. That's one way to play this and go from there. So from a heavily shorted stock perspective, top of the list we got TIGR, Up Fintech, Chinese-based stockbroker. As you scan through here, institutions are buying, insiders are also buying. And it's got a nice sales growth, fundamentally sound company. And it also has a net margin, company is making money. Low RSI tells you could buy the stock at these levels, stock is oversold. For you option traders, IV percentile is low, which tells you could buy some call options long term, maybe 90 days or more out. And institutions supported that 20% of the institutions are buying this company. High short ratio, as you can look through here. So this is a very heavily shorted stock here. And from a float perspective, we got 22 million float here, which tells you not too much stock is outstanding for us to trade. That's a good sign. I love when we have low float and high short ratio. That tells you this can create a short squeeze type scenario. And look what's happening in trading from a performance perspective. Last 1 day down 7%, 5 day down 11%, and even for a month and 6 months is down. In a nutshell, stock has been going down of late despite of good news that their revenue is up. So I think this is where we can be contrarian here and start buying some up fintech and prepare for the next leg higher. There may be some little bit short-term pain here. I think it's worth taking for this stock given there is a strong fundamentals indicated by gross margin and quarter-over-quarter sales, and also an opportunity for a swing trading and a short squeeze with a high short ratio or a short float and a low float here. I think I would accumulate TIGR at these levels and take it from there. And I have also highlighted few stocks here in the gray background here. You could take a look at those candidates here and see if it's worth buying. I think many of these stocks are worth accumulating slowly. So with that, pay attention to what insiders are doing and what institutions are doing. For example, we got here VIH, institutions are buying heavily, AGC, same story. And we got PBTS and Neuro, there's a good insider purchase also. That tells you insiders are having conviction the stock will go up. One thing to note in case of PBTS and Neuro, the market cap is low. That tells you these stocks can be easily manipulated by these big hedge fund managers. And as you scan through here, we've got Best, Best and Ride and APPH. All of them got nice insider purchase. That tells you insiders are have conviction the stock will go higher. Look through here. All these stocks, many of these stocks have got nice double-digit institution buying here. That's a great indication. Coupled with the high short ratio and institution buying and a low RSI below 50, that's a good indication that we should accumulate slowly and play along. Also give importance to the sales growth here, where you see double digits quarter-over-quarter sales growth and a nice gross margin. Those are fundamentally strong companies. As an example, we got TIGR here and even Neuro. Neuro also has a low RSI. That could be a good sign here. I would follow this methodology here. And as you look through here, also look what's happening in the 1 day, 5 day range. If you see some uptick in 1 day, 5 day and stock is down big in the longer term, like 6 months, 1 year, that's a tell. That tells you, hey, you know what? There may be a short squeeze in play. For example, VIH and AGC, you can see here in 1 day there is some improvement here, and in case of VIH there is improvement in 5 day. That tells you there may be a short squeeze in place slowly. I think it's good to identify that and take it from there. Same story with PBTS. On the other hand, if the stock has gone up high, for example, look through here, IV person, RSI, best has gone up so much here. Don't venture in these type of scenarios. It's good to wait a little bit, let it cool off a little more, and then you can venture in. Same story with the Go EV. Right now it's gone up nicely. RSI 70 indicated by nice performance. I would wait a little bit, let it cool off, then we will jump in. And same story with CIE. Right now stock has gone up so much. I would rather wait for a little pullback here. And focus on low RSI candidates like TIGR, and anywhere it's below 50, you focus on those candidates, and also keep watching both short ratio. All of them are high here, which is short float, and look at the float itself. Typically a low float. Right now I have indicated all the floats which are below 100 million in a green sign. That tells you there is not much stock available and can create a short squeeze. Lower the float, the better is the squeeze. So with that, let's jump in here and go look at few more stocks. As you look through here, we got Beyond Meat. It's a $6 billion market cap. Institutions are buying. Low float for a $6 billion market cap. A 56 million float is very low. Also, this company has got a nice sales growth here. I love that. And also okay gross margin. Stock has been down of late. RSI is low, 37. I would pick this up and hold it for a while. And we got BTCM here, BIT Miner, $9 stock here. And as you see here, institutions are buying, insiders also buying. Nice sales growth here. High short ratio 23%. Short float is also low, just 22 million. Stock has been down of late. I would slowly accumulate BTCM into this weakness and take it from there. And we got few more here. You can go through them. And as you look through here, Weibo, another Chinese company here, $46 stock. Strong from a institution buying perspective and insider buying perspective. Nice sales growth. And this also has a low float here, high short ratio. Stock has been down of late. I would buy slowly into Weibo. That's a good one. And any which is peer, right now $5.88 stock. Insiders are buying, as you can see here. And RSI is 50, middle of the range here, and low float and high short ratio. I would pick up a little bit into this weakness on Spear and take it from there. Keep attention here. It's a low market cap stock, can be manipulated by big players. And we got few more here. Pay attention to what RSI is doing, and if it is below 50, and if you see strong sales growth or institutions insider buying. In this case, we got good insider institution buying here. I would go with those candidates here and take it from there. I was trading Sawa a while ago. It was down big. It's now it's coming up nicely. I've been taking profits slowly off the table, so that way we can have money for next big candidate here. So with that, if you're an options trader, pay attention to IV percentile here. We got any with high IV percentile. We got TMC, same story, and we got one more here. Many of these high IV percentile candidates, see if there is a money to be made by selling a put option underneath the stock price. If the stock price itself is very low, like any here or TMC, I would not venture, not a great candidate. You could even buy stock outright. But if the stock price is about 20, for example 80 US here, it's at $20, you could sell some put option underneath and get some premium in. So with that, let's look at next chart here. We got few more candidates. As you scan through, we got here QuantumScape. Looks like insiders are buying. That's a good indication. And also institutions are buying. Right now there is no sales, and so there is no sales growth. And this also has got a high short ratio. Only thing is they got little more float here. That's why, it may not go too high quickly, given float is a little higher. And as you scan through here, we got few more here, Fubo, Livent, and so on. And look for the candidates where there is a high insider buying as well as a high institution buying. Those are the good candidates you can focus on. Especially I love Solo here. Solo is a good one. Stock is down big, and insiders as well as institutions buying and a low sales. As you scan through here, it also has a low float here. And as you scan through, we got REI. REI also, as you scan through here, nice insider buying and nice institutions buying. And this also has a low float and could be okay to buy. And as you scan through here on the REI though, RSI is a little higher. I would wait for this to cool off a little bit, before I buy REI. And as you scan through, we got a couple more here. Pay attention to RSI. If RSI is high, above 50, just wait for a little bit pull back, and then you can buy. And I also love here stocks like Stitch Fix and Real. I think they've been down for a while. You could expect a stock to go up. I think Stitch Fix already went up, as you can see here. I would not venture in right now. I would wait for other candidates where stocks are down with a low RSI. So with that, I also like some of these Chinese stocks here. For example, IQ Chinese stock here. Institutions are buying, as you can see here, and high short ratio. Float is little high, but I think it's okay to accumulate slowly and take it from there. And Sunrun also, I think it's a good one, $43 stock. And as you can see here, short is 18% and also a little higher float here, which is okay. I also love Fastly here. Fastly is a great company. As you see here, low RSI and even low float below 100 million. That's a good one too. So with that, let's look at one more chart here. And as you see here, LICY, there is a nice insider buying and a nice institution buying, but RSI is 76. Also, when RSI is high, you can also see here there is a nice performance in the shorter term. That's why I would not touch stocks like LICY and CAR here, given they have a nice run. I would focus on low RSI candidates and go from there. And as you scan through all of these, I got high institution buying. I would focus on those candidates, and especially with the low RSI. If the RSI is higher, like the ones indicated here, I would not touch them at these levels. Wait for a little pullback here and focus on low float candidates. Those are the ones which will give you, bigger squeeze opportunities. So with that, let's look at a few more. I also love FT at these levels here. Stock has been down big, and I think it's okay to slowly accumulate and go from there. And look at some of these opportunities where we have high IV percentile. Could be a good one to look at right now. I think with the WTRH, you can't make money selling put option here because it's a very low dollar stock. You would rather buy the stock outright. So with that, let's look at few charts and see what we can make out. And first, let's look at TIGR, Chinese-based stockbroker, expanding internationally. Stock is down big. See what's happening here. Stock is down, indicated by this down chart here. And when that's happening, on the balance volume is pretty steady. That tells you, even though stock is down, there is a conviction and folks are buying the stock. As you look through here from a numbers perspective, institutions are buying, insiders are buying despite of stock being down. And short ratio is high, and there is a short float which is low, and nice sales growth. So I would take this opportunity and accumulate a nice position in TIGR, and go from there. And next we got VIH. VIH, you got to be a little careful here. Stock is in the trading range for a while, so I would not buy any put option, call option here. but it also, as you look through here, there is an institution buying here, and float is low. That's why I would venture and buy slowly at these levels. Given the float is trying to go higher slowly, I would slowly accumulate a position here and go from there. And normally when you are trading the short squeeze type candidates, look at the history of the stock. For example, TIGR, it's a history of going up and down. Stock is having momentum and a pulse. It's not dead stock. And same story with VIH. Only problem is last few months stock is flat. That's why you might have to wait little longer here, but I think it's worth the wait. And then we got here Blink. Blink is a nice candidate in my mind. So it's been trading in the trading range for a while. Look at on the balance volume, pretty steady here. And as you look through here, institutions are buying Blink. It's got fundamentally good sales growth here. That's a good sign. And there is a high short here, 36%, and a nice float here, 36 million. So I think that makes it a nice candidate. There is not too much stock available, just 36 million, given it says $1 billion market cap company. So that's why I would buy slowly into Blink and accumulate a nice position here. And then you got WOOF. WOOF is a pet care type company here. And as you scan through here, okay looking chart, stock is making a little comeback here. Still RSI is mid-range 52, and on the balance volume is pretty steady. And WOOF, as you look through, institutions are buying here. Nice gross margin, and short ratio at 34%. And it also is a little bit low float, just 46 million float. That can increase the probability of a short squeeze. That's why I like to accumulate WOOF on the down days. And next we got few more here. Smile Direct, as we talked about, the company is expanding internationally and improving the presence in Europe and France especially. And as you look through your stock is not doing great. On the balance volume is also down, but institutions are buying heavily. Insiders also buying, and a little bit higher debt to equity, telling you they have a little more debt on their balance sheet. One thing to keep in mind. But as you scan through here, high short ratio and short float is also reasonably low compared to its market cap, which is 2 billion. That's why I think we should take advantage of SDC being below $6 here and buy SDC slowly and accumulate. I think their growth initiatives will pay off as we go forward. And then we got Lemonade. Lemonade is one of my favorite stock. These guys are trying to really go with the artificial intelligence and really disrupt the insurance industry. I think stock is kind of going sideways here. On the balance volume is steady, and institutions are buying this stock here. And there is a high short float, high short ratio, and very low float. I think Lemonade is intriguing here. I would buy some Lemonade here and go from there. And then you got Clovis Oncology here. Stock is in the trading range for a while. Nice on the balance volume, nice institution buying here, and also has a high short ratio. Float is little high, but I think it's manageable. We could slowly accumulate Clovis Oncology here. And next we got PRTS, car parts. Stock is doing okay. On the balance volume is also pretty steady here. Institutions are buying heavily. Insiders also buying. That's a good sign. And high short ratio and low float. That's why I would accumulate PRTS at these levels. This stock also has a history of going up and down. Right now stock is kind of below 200-day moving average. I think it's a good one to accumulate. Next we got few more here. Beyond Meat. Everybody knows Beyond Meat, plant food company. This is known to cause short squeeze, as witnessed by multiple short squeezes. Right now stock is down. On the balance volume is steady. That's a good sign. And as you can see here, institutions are buying, insiders are buying. That's a good sign. And for a $6 billion stock market cap here, very low float, as you can see here. That's an interesting number here. So that's why I would be accumulating beyond meat at these levels and go from there. And we've got BTCM, a Bitcoin miner here. Stock is trying to show some progress in the short term. On the balance volume is pretty steady here, and institutions are buying, insiders also buying. That's a good sign, and there's a nice sales growth here. And as you can see, a high short ratio and also a low float. So I would accumulate BTCM at these levels and go from there. And then we got Weibo, Chinese-based company. Stock is down big, as you can see here. Chinese crackdown on all these big stocks. And look what's happening. On the balance volume is rising. That's a good sign here. It's flat on the higher side. And institutions are buying Weibo. Insiders are buying Weibo. And nice sales growth. I love this sales growth. And for a $10 billion company, the float is very low and a high short ratio. I think that makes it the ideal candidate. I would slowly accumulate Weibo and go from there. And then we got any, which is again, stock has shown some progress of late. As you can see here, it's in a bullish territory. On the balance volume is higher. Insiders are buying. RSI is a little high, so I would wait for a little pullback on this one. Even though stock is down, but it's up big in 1 month, 3 months, and so on and so forth. I would wait for a little pullback here. It might go a little more higher given float is still low, but it's worth waiting a little bit for a little pullback before you put your money and invest in this stock here. So with that, this is a little cheat for you. From an entry point perspective, make sure RSI is below 55. That increases your chance of short squeeze type scenario. And also look for a low float type scenario, high short ratio, a little bit low float, maybe below 100 million or so. If the on the balance volume is rising, that's a good indication. And if the RSI is greater than 60, on the balance volume is falling, then don't buy. If you already have the stock, you can sell slowly and take some profit off the table. And as you look through here, look at fundamentally good companies with the positive sales growth and gross margin, especially if you're a fundamental trader. For a technical trader, you don't need to worry, but good to know there is a growth from a sales perspective and a nice gross margin. And look for catalysts like high short ratio, insider institutions buying the stock, and also look for a low float. And option buyers and seller, always look at what's the RSI level and what's the IV percentile. When the IV percentile is low, below 50, don't be an option buyer, instead be an option seller. On the other hand, if the IV percentile is high and RSI is low, you can be a put option seller and make some money by bringing in some premium. So with that, thank you very much. Happy investing and trading.